Party leaders in the House and Senate have reconciled their two tax bills. This information is changing hourly, daily, so we want to get you this as quickly as we could. Some of this information, by the time you watch this, could be outdated because lawmakers are actually writing the law as we speak. But here's what we know as of today, that the House and Senate have reconciled their bills. They're going to try to vote on this collectively by Christmas. And if they do, and if they pass it, and if President Trump signs it, we'll have a new tax law for 2018. So to give you some of the finer points in this, let's start with individual taxes. Individual taxes, the highest rate's 39.6%. That will actually go down to 37% in this new negotiated bill. Second thing is state and local income taxes. A lot of people have been talking about this. So there's going to be a $10,000 cap on a combination of property taxes and state and local taxes. Before, you may recall that you could only deduct up to $10,000 of property taxes. Now they'll let you do any combination to get to $10,000. Mortgage interest, currently you can deduct interest on a $1 million loan. That would go down to $750,000. We don't know what the effective date on that would be, whether that would be before January 1st or at January 1st. The Obamacare mandate to have health insurance would be repealed. In other words, you don't need to have health insurance. Currently, you get penalized if you don't. And there's a few items that would actually stay in the law, like medical deductions. So if you're a senior in assisted living or long-term care, those expenses would be tax deductible still, so that's good news. And then finally, if you're a student loan interest would still be deductible. And if you're a graduate student receiving a graduate school tuition waiver, that would still remain tax-free. Alternative minimum tax would remain, but they're going to try to write in exemptions for if you're a single person, if your income's under $500,000, you wouldn't have AMT, and $1 million for a married taxpayer. And then finally on corporate taxpayers, the corporate rate would be 21%. You may remember the current rate's 35%. Both bills brought it down to 20%. They raised it to 21%. And finally, pass-through or small businesses, their tax would be the regular rate, but they would have 20% of their income tax-free. If you'd like more information, you can always go to purefinancial.com.